I'll kick this one over to Karina this time. We'll go to you first here. Do you think the idea of being a rentvestor your entire life and then just having, let's say, a good accumulation of assets is still a viable thing in the setup of Australia? Or is that rentvestor thing kind of changed now that rents have gone up so dramatically in recent years?
Often rents are going up and they're not coming down when we've seen, when I started broking, interest rates were coming off the 7% and going down and down and down and down and down. And on the rent side, rentals have either stayed or have seen an increase, but they've not come down. So I do believe that there is value in renting, in the sense that the ongoing costs and maintenance are lower. So you could be paying apples for apples the same as your mortgage payment for your home as you are, like for your PPR as you are for a rental. Yet, yes, you are restricted with the upgrades and changes and renovations you are making to your rental property, but when you look from an owner-occupier's perspective, as Aaron said, the stormwater, the costs or the additional landscaping, yes, they could be maintaining value. They might not be adding to the value. I believe that it is something that, yeah.
Oh, come on, have an opinion. You're only on a podcast that's getting broadcasted out to the world.
I think it will continue for a substantial period of time longer, the rentvesting journey. There's a lot of space in Australia. There's a lot of developments that are still happening with immigration, coming back in. I think there will be an appeal for a lot of people who in other countries are used to renting. So it will be who are wanting to live in higher density areas potentially that might be pushing for the rental market still being there. So I think rentvesting, where you can still be a renter yourself, but you've got the opportunity to invest to provide other people a home, is a pretty good option.
That's such a good point. Let's say you wanted to live in Sydney CBD, where there is undoubtedly a lot of high-density apartments that are available. Not a great asset to own. One could make the argument for, but if it's where you want to live, that PPR play just doesn't necessarily make sense. You would, in looking at prior things, not guaranteeing future results, but like that type of scenario would enable the rentvestor in a different way. Now, I did some interesting maths on this, and when I say maths, I went to a website and found someone who had done the maths, and I'm going to regurgitate what they said. The maths says that if after 14 years, so if you were to stay in the same place for 14 years and rental rates remained, on average for the last 30 and everything else, after 14 years, you're better off having bought, because the mortgage payment that would be on the home would now be much lower than the rent to offset all the maintenance and everything else that goes into it. But the big flaw in this is that it doesn't take into account if you had invested the difference across that. So if you did do the rent thing, but you were diligent enough to do some property investing to the side, well, now the maths is really blurry because the potential returns on what you could have got in other factors start to weigh into it. So owning a home versus renting a home, the numbers can be so heavily skewed to one being a better or not better financial decision that it really does throw up some more into the mix here. Now, Aaron, what is your view on this rentvesting thing? Is it viable in Australia to be a rentvestor your whole life, and is that a path people could pursue rather than, I suppose, what we'll call the traditional Australian dream here?
Rentvesting, I think it has its place. It has its place for a starting out investor that may not have the deposit that's required for buying an owner-occupied property where they are working, where they need to go to the factory, or where their place of the schooling for their kids are. So renting can help on that side of the equation to be able to minimize the deposit required and maximize the borrowing capacity. So instead of going for the $2 million house where you need to go, you could probably rent there, and you can go after the $400,000, $500,000 investment property. So that combo strategy comes into it, and that also has a benefit on the borrowing side as well, because the borrowing power for a rentvestor can be a little bit different to when you have a mortgage. So if your mortgage is $2,000 a month, the banks will put buffers on that. So it may turn into like $3,000 a month, $3,200 a month of sensitized and the buffers that the banks put in there. Whereas the rent, if you pay $2,000, it's just $2,000 of expense on the calculator. So that can have a bit of a difference on your borrowing capacities, the ability to jump into the market now with a lower deposit. So that's a really interesting
Could you just give me a summary on that? Are you saying that your borrowing power might be better as a rentvestor because the rent is taken as absolute, where they put a buffer on the mortgage because of the variability in interest rates? Is that correct?
Correct.
Interesting. Yeah. So if you wanted to go for like max volume, technically you might be better off rentvesting.
Yep.
All right, but the obvious counter to that is that if you buy a PPR and it does grow, is that that's potentially an equity play and tax might work better for you. So there's a trade-off.
That's right, and that's the unfair advantage. So I know on podcasts and on the other podcasts that we delightfully sponsor on business and investing, the unfair advantage that you talked about, that was in self-employed land or business owner land, the unfair advantage that a homeowner has here is that equity play. Like if you can't save up the deposit for an investment property, or you've got some cash and your risk tolerances are right, we can look to revalue your principal place of residence and grab some equity out to accelerate your property journey, depending on your own personal risk factors and buffers that you require. So that's a really interesting unfair advantage there that owner-occupied or principal place of residence owners have as long as the property goes up.
All right, fellow property investor, if you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.